Right, YouTube. Welcome back to the highway. Traveling on. I'm just here to share the view. If you listen to me, that's on you. Um, but it is a great view. So, part two from the highway. I'm going to dovetail off a dad on YouTube video. I think it may have been last night or maybe it was this morning. He put it out. But his financial economic index that he tracks with the Disney chart that he was talking about. Go check out that on YouTube for all things. But he was talking about how he was tracking out how things are doing in the economy just basically upon the activity that he sees at Disney or not, and his own activity goes along with that about how people are doing. He also has a fast food index or whatever he calls it. As I had back a few years ago, I called it the Vienna sausage index, tracking that in the grocery store just to see how inflation is really going. We're at 49 cents. Now we're at 79. So on that index, it's almost 100% over 5 years. But anyway, so yeah, the economic situation, the continued good news. The stock market all-time highs, and how this tracks with what Dad's talking about. And I think I've said it before, probably a few times. Um, so much of what's in the markets is driven by people's desire to get ahead, right? They see that as, and it's being more and more pushed as the only alternative to increase your money value, right? To increase your monetary value of your dollar. Your dollar can only go in these funds to go in the market somewhere, whether it's index fund, ETF, mutual fund, something has to go in the market, or you're just not going to make it. That is the full court press of what they push daily. Whole TV channels based on it, right? And that just continues to go up, regardless of what we see or any other contrary evidence or any other things, right? Anything else you see, whatever Dad sees, or whether it's Disney stock or whatever else, the markets must push forward. And as long as the market's happy, the Fed's happy, right? Because it gives that illusion of success, I think. And what's the real deal is what do the real people feel like what Dad talks about. What do you people seeing out here? Now you're on the highway. Dad was talking about how he saw gas going up. And I'm like, no, we just had gas. I just saw gas this week for the first time below $3. I mean, it's been a long time since I've seen gas below $3. And if it's going to go back up already, then it should have been down below $3 all winter, but it's not been. And if it just spikes back up now in the middle of February or end of February, like, yeah, that's no relief. Because we just recently had it go down to a tolerable point, and to have it jump back up so quickly. So maybe what Dad is seeing or what he's heard about on gas prices is regional, maybe. Yeah, they just went down here like 2 weeks ago to a point where it's like, okay, maybe we can ride this until summer. Let's wait till May to spike this back up. But what's going on? How much of that is driven by the Red Sea regional thing, the demand for gas outside the country, and our own, to follow up on the last video, our own incompetence at the top has put restrictions on natural gas exports out of Texas. I'm not going to segue. I don't want to segue into quote civil war, but is that not economic warfare in the state of Texas? I mean, it's going to make probably prices internal. If we can keep things domestic, keep a lot of that internal, make the prices go lower. We're going to have increased domestic supply, but we'll see how that works out. Doesn't mean it's good for the bottom line of those companies that work out of Texas, because they're guaranteed. They're trying to work off of a certain margin of exporting a certain number, right? But financially, the way things keep, all the indicators of everything except for the stock market seem to be not good. They come out with the jobs number. They put out the big number, but all that big number is comprised of is mostly part-time jobs. The number of people working two jobs is exponentially increased over the last couple of years. So people are having to work more for less, more jobs, more different things to make enough to keep going, to make ends meet. And that's not reflected by the news, right? They just report out the 300 and some thousand jobs that they portended the last time without getting into the weeds. Like, yeah, this is really not good the way this is being reflected, right? And every time, I just saw this morning, CNBC, excuse me, putting out this morning about, because every month the Fed revises the previous job numbers, right? And I think it was the January jobs number got revised less down than they expected. So it got revised down like it always has been forever. They've been overestimating to boost the outlook and to boost people's perception for years. And that it got revised down less than they had expected. So whatever that number was, it's like they're just saying it wasn't as bad as we thought. We knew it was going to be a more realistic number, but it wasn't as bad as, so they continue to smoke and mirrors this whole thing. And people's only hope, it seems like, is to pump money into the stock market. And that's why that number goes up. NASDAQ, now, all of it. And it's more and more what they call, now it's down to what they call the Magic Seven, I think, or the Fantastic Seven, or the Magnificent Seven, or whatever they're calling, seven primary stocks that they're focused on to really show the growth. And this is what's really driving the economy. Like, yeah, these seven corporations are really, what were they? I wish I could know what they were. Break that down a little bit. But it's not like they're all the backbone of the economy. A lot of it is computer, electronic software, AI-based stuff that they're really putting this into. I think they pulled Apple out. And now with this new release of this new system Apple put out, that's going to be part of the Beast system. They're thinking about putting it back in. But anyway, so everybody's focused on these seven. Everybody's money, all these funds, all these mutual funds, all these hedge funds, dumping all this money into seven companies. And they're driving all these markets, whichever one, whether that's the Dow, the S&P, or whatever, up, right? S&P broke 5,000, which is just an insane number. And a guy was talking this morning, like, this ride isn't over. It's like, where's this money coming from? How is that not inflationary? How is that not inflation? But it's not for the common man, because you're either contributing to a 401k because you're forced to, or it's part of your package, or you think it's the best thing to do if people max it out or whatever. And millions of people are contributing to this line without knowing where it's going. Right? Very few funds are able to control your own destiny, or get what you want when you want, without giving a severe portion of Uncle Sam, right? So there's, like Dan was talking about, there's his indicator, and then there's the TV. What the TV says is the indicator, and they don't match up. What you see here on the ground, like people just now getting some relief, for like a particular gas, and you're saying it's going to go up, and like that wasn't anything. Like there was no relief. People are pinching pennies. Hopefully everybody got their garden figured out. Hopefully we'll be able to share some garden stories this year for everybody. You can only do what you can do, but definitely do something, because how in the world are people going to be able to afford the eating out culture, the fast food culture? And again, I caught this on CNBC out here on the highway, catching the CNBC in the morning, talking about how companies were seeing increased revenue from convenience stores because people are going back in the office, and their travel habits are changed because they're not working from home. I found that interesting. They can actually track that, where their sales are out of convenience stores, that's increasing and stuff, etc. And I guess you could say that that's probably from people going to the office, eating whatever it was, out of there, where they're getting the sales from. People traveling more because gas prices really come down that much. They were talking about last year's report, so in a whole year they were reviewing, basically. Um, so the money's been, maybe it's just all the moving trucks moved out of California accounting for all that convenience store sales. Track that index. That index continues to outperform. If we could have a futures index on moving vans out of California, we would all be rich. Because it's still, what was another one they were tracking? Somebody was, where was it? It wasn't New York City, but maybe just the Bay Area. Maybe now San Francisco in particular. The cost to get a moving van out of San Francisco was just exponentially crazy. Then to get a moving van to go from, I think it was Boise back to California was like super cheap. That's where they need them. They need to get them back there. So you want to rent one out the time. So all the conflicting indicators. Again, it matters what's happening out front, inside your front door, and in your pocketbook. For the most part, the most important thing. Don't believe what your lying eyes tell you. Right? You believe me or your lying eyes. Dad says that too. Because if they're not conflicting indicators, they're definitely not going out the whole truth there a lot of times. So fiscally, economically, unstable debt, how far does that go? How much are you expected to contribute to that debt? They're going to come more and more after those 100,000 IRS agents didn't get hired for nothing, right? You just got to wonder how CBDC rolls into all this, because that's going to be the ultimate way to cancel some of this debt on the down low, right? Without raising too much fuss, devaluation or revaluation currency. And that's going to cause shockwaves one way or the other. Look what happened after Nixon did what he did with gold. He couldn't exchange it anymore. Automatically, we went into a crisis of oil right after that. How widespread would it be? Would we do that again? That was a revaluation of currency in reality, and that's what's going to happen with CBDC. It's interesting. Watch a channel, Salivate Metals. He's been tracking the debt clock and the secret messages they've been putting in. And they put out this secret message basically, saying that the dollar as it exists now is going to be dead in 2024. And they're putting out this message of a new money, resource backed and everything, which I think is wishful thinking. The banks won't allow that. And if you destroy the central banks at this point, like you would be in that mass chaos scenario. You can't just eliminate all that debt without a lot of pain from a lot of people who swing a big stick. So keep your eyes open, people. Don't just watch the shiny objects. Watch what the magician's doing behind his back. They're keeping to push this thing along, and to what end, right? To what end? So we'll let that go here. Hope you enjoyed the view. That's what it's all about. The park for free.